Travis, good to be with you.
Great to be with you too, Damon.
Thanks for being here. You know, before we get into lots of stuff I want to ask you, tell me a little bit about yourself and a little bit about the firm.
You bet. Well, I've been an attorney since 1999, and somewhere around 2005, I started taking some continuing education for this tax niche and started adding that to my business litigation practice at the time. And before I knew it, this was taking up everything. There are so many people with this problem that there's not enough time in the day, not enough manpower sometimes to get it all taken care of because it's a huge problem.
Yeah, against the one entity that probably has the most unbalanced scales of endless time and endless resources. So it's a tough one.
True. Although they have been cut back a little bit, which is, has caused them a little bit of customer service problems to the extent that you could say it's customer service.
So, you know, I guess before we really dig in, you see the commercials all the time.
Yep.
All over the place. Get you down to pennies. Now, can I call any one of those guys?
I wouldn't call one of the national firms if I'm a taxpayer, mainly because the IRS is a local entity if you really think about it. Their collection officers are local. And it's very difficult for someone who's in Los Angeles or Denver, Colorado to take care of your problem if you're here in the East or if you're in Oklahoma or Dallas where my clientele comes from. And it's just a very difficult situation. I've heard it straight from the IRS that they have a hard time dealing with somebody who's so far away from where the problem is located.
Right. Now, people find you, who's coming to you? What age? Well, let's just start there. Like, what age is someone coming to you? How far into the problem, I guess, is what I really want to know.
Yeah, well, as far as demographics are concerned, boy, it runs through just about all areas of life. It seems to happen more to men. Folks that are in their mid-30s, they've made some money. When you've gotten in that situation, you're running right into potential IRS problems. If something happens in your life where you fail to file, that's a very common one, or you do file and you fail to pay for any amount of time, and that starts this snowballing issue in your life where all of a sudden it becomes too scary to look into the problem and start filing because, oh my gosh, are they going to jump out of the woodwork and really do some damage to you?
So clients that are coming to see you, are we talking about the guy who owes $500 or a guy who owes $5 million?
It can run the gamut, really. I mean, they get in this bad cycle of not filing and not paying, and it really can just really run the gamut between any of those problems. I would say that we really try to keep these things at about the 10,000 and up mark because that provides folks the best value there as far as our services are concerned.
I saw a staggering number, and I don't know if it was accurate, that something around the 1 in 3 these days almost of the population has some kind of IRS issue that they need to deal with. That seems to be a staggering number to me.
It is a staggering number. We did a focus group not too long ago with some things, and we saw a staggering number of folks that was in that neighborhood, 25% or so, that had either a tax problem right now or had one in the past. So yes, it is a pretty staggering figure. I think a lot of it has to do with penalties and interest, for one thing. Those used to be a slap on the wrist to you to get you to file and pay on time. Now they're meant to really bring you into submission because they're huge, they're astronomical, and they just compound and continue to run.
Let's talk about the firm, what you guys are doing. Are you doing mainly individual and some corporate, or all individual? What do you guys handle?
I would say that the big majority of the clients that we have are self-employed or small business owners, although we do both types. We do individual tax problems as well as corporate tax problems, but the folks that run their own businesses seem to get into more trouble with the IRS than the folks that have it already taken out.
Yeah,
as you can imagine with the W-2 wages.
Yeah.
But I think a lot of that is it's very difficult to understand the tax code and know there's really no courses on this in entrepreneurship or small business to really show you exactly how things are done. You have to do, and there's so many taxes that a small business owner has to pay, local, state, all of those things that they're the highest group, I would say, that the IRS comes after.
Yeah. So before we talk about when someone actually comes into your office,
yes.
If I'm at home and I'm seeing commercials and I've got 4 years of unfiled and I'm thinking, okay, this is getting away from me, I got to get on top of this. What is someone looking for in a professional? Obviously, you want everybody to come to you, but what should they be looking for? And when they see your commercials as opposed to someone else, or they give you a call, what should they be looking for specifically?
You're looking for someone who deals with IRS collection matters every day. And I hear that too a lot on commercials. I hear a lot of folks saying, we employ former IRS agents
right.
as people that work in our office. And that's a little bit of a misnomer for one thing. The IRS is pretty diverse. There's auditors, there's collection officials, those types of things. We're dealing with collection mainly when somebody has a tax problem like that. And so you want to have somebody, first of all, local, as I mentioned before, that deals with IRS collections on a regular basis, also that deals with IRS appeals. The IRS does say no quite frequently on some of these relief packages that they offer, so you want somebody who deals with IRS collections and appeals as well. And you want somebody who can formulate a plan for you not only to stop the current tax problem that you have, including filing any unfiled returns. They do need to have accountants, bookkeepers on staff that do these things, but who can also, once the problem is fixed and you're across the finish line, all these debt relief packages that I'm sure we'll get into here today require that you keep going with your compliance from year to year, or a lot of these packages end up just coming right back on top of you, including penalties and interest if you can't stay current. So a holistic, full approach here is what you want, from filing the unfiled returns all the way to ongoing accounting and tax preparation services from year to year. And that's what we offer at my firm.
So on that first meeting, someone comes to your office, how much of what you guys have to do is educating that person on even what their rights are when they sit at the table with you?
Sure. Well, nobody thinks about what your rights are as a tax problem person until you have this problem, for one thing. It's just not something that folks think about. And you don't have just a ton of rights when you owe them money. You don't have the ability to just not pay them or come up with some kind of a alternative to payment if you for some reason can't pay them. So that's the type of educating that we do need to do in this process, and we do deal with the IRS's Internal Revenue Manual. You have the right to stop a collection official at the IRS from asking you certain questions. Now, I'm not talking about criminal matters, that's a separate issue, but in the collection realm, you have the right to stop a conversation and ask to speak to a licensed attorney, a licensed professional that deals with the IRS. So that's one thing that we employ quite a bit and have to educate folks on that, right? There's also, depending on where you are in the collection process, you may have the right to a hearing with the IRS where your attorney can ask for one of these hearings, and we can talk about disputing the debt. We can also talk about what alternatives short of levying them would be available, and those things are installment agreements of various types, offers and compromise, that's the settlement program with the IRS, penalty and interest forgiveness or abatement, many things that can be done. But let me tell you, when a revenue officer or an IRS collection person is standing right there on your doorstep or in the foyer of your office building, boy, all those things go out the window. And that's why you need a local licensed attorney to jump in there and enforce the rights for you.
Right, because the IRS doesn't have any legal obligation, or do they, to help you pay. They can, I guess, come up with one of these offers and compromises, but they don't have any legal obligation to make that happen.
That's a great question, because they are tasked with a very difficult job, I would say, and that is to, of course, collect for the government and to advocate for its best interests. But there's also this counterbalance where they're supposed to be fair with taxpayers and also balance that with the best interests of the government. And a lot of times that's just not something that can be done. The Internal Revenue Manual, that collection Bible for the IRS, does speak in terms of you have to use, collection officers, the least intrusive manner of trying to collect a debt. And as I mentioned, that's a pretty difficult thing to balance sometimes. Yeah, they do have to do certain things before they would seize a home, for instance. They have a procedure there that they have to go through. But as far as helping you out, you're kind of on your own, and you need a local licensed attorney to step in there and enforce those rights.
Yeah. I know you said before 10,000 was kind of your, as far as if you owe 10,000, then it really becomes effective to reach out. But
right.
Let's say someone hasn't filed in 2 years, maybe 4 years. Is there a number of years where you have to say, even if, let's say the dollars owed maybe don't add up to a, generational money, but
sure,
is there come a time where even if you haven't filed, there's a way to do it when you decide you're going to try to catch up?
I think there is. The IRS requires that you have all unfiled returns filed before they will start negotiating with you on the whole tax debt. So it does have to be done. But I think there are strategic ways to do this that work to the taxpayer's benefit. First of all, you want to get the return that's on file, that's due on file now, and get that thing started. Because when your time comes for the IRS to look at your, say, offer and compromise, your settlement package with them, they're going to want to, they require you to be in full paying compliance for that period. So you want to get that thing on file for this current year so you know what you need to pay, if anything, to have your offer and compromise, for instance, go through. Filing the past returns there is something that can be strategically done. We do them very quickly, we do them very accurately at my firm because we want to get on to the next step there. But yes, I think you can stagger that process a little bit, get the one that's due now or the most recent one due now, and then start filing the older ones as that catches up. Even if you don't have the money to pay the old ones, you've got to get them on file, and that's why we want to get them moving, pretty boom boom from the one that's due now. I mean, it's required, and so.
Is there a tax out there? It's a sloppy question, but is there a tax that's more dangerous to the individual, so say to the S corp or to the, a pass-through company? Sure. Is it when you start getting to payroll taxes or things like that? Is there one that's really dangerous for somebody out there watching, maybe that's in that situation? For a business, payroll tax is kind of the crown jewel of collection with IRS collection folks, because there is a portion of that payroll tax that you are an involuntary trustee for the United States government, for lack of a better term, that if you don't pay, you are a criminal in the eyes of the IRS, because you were supposed to hold on to this as a trustee and pay it on over to them. So yes, I would say that's the big one. I'd say that's pretty dangerous.
It's a dangerous one, and they can get you as a responsible person, they call it, a business owner, anyone who has the ability to pay or not pay certain bills as they come due, and they can enforce that against the board of a company, for instance, the officers of a company, and they do that routinely, and they don't necessarily just do it to one owner. If there are multiple parties, they like to keep their options open
Sure.
on that as well. So those are deadly ones. They can't be discharged in bankruptcy. They stick with you personally until the debt gets paid by the company or some other responsible person, or the statute of limitations runs out on it, whichever one occurs first.
Let's talk about some of the nomenclature. People come
Sure.
into you and they say, "Oh, I have a levy or a lien," or and some don't even know the difference. So let's get into that. What are the difference between the two?
Yeah, those are changed in and out quite frequently. The lien, I would say, is more of a involuntary, passive type collection measure by the IRS. In other words, they're not actively jumping in your bank account with a lien or your wages. They're filing against your property, usually your home, and it's going to stay on that property until it gets fixed or paid or sold. They like
Right.
the sale also, because and we have these quite frequently where a taxpayer will come in, they didn't even know they had a lien until they started the process of trying to sell their home, and now it's causing all kinds of problems for them. And the IRS is content with this, because they'll just stand there at the closing table with their hand out to be paid out of any equity
Right.
that happens in that transaction. Now, a levy, on the other hand, is a active collection procedure where they are actively taking money out of your bank account or your wages. And these things get really sticky too. A bank levy, where they take money directly out of a bank account, you have 21 days, or the bank has to send the money along. If they don't get a release from the IRS, their hands are tied. They got to send the money along to the bank. A wage levy, those are coming straight out of your paycheck every month. Or for the self-employed individuals that we represent, quite frequently the IRS will put a levy on, say, their accounts receivable, the folks that should be paying our client, the taxpayer, for work that they've performed, for example. And those get really bad too, because as you can imagine, the folks that are paying you as a independent contractor or self-employed person don't take too kindly to that thing, because now they have a bunch of responsibilities that they have to do in paying over the money to the IRS instead of paying you.
So let's stick with lien for a second.
Sure.
And you described this, certainly the real estate transaction, where if you had no other option. Is there a difference between taking care of that lien before you sell the house, or if it has to go to being paid out of proceeds of a sale? Is there any difference between them? What does someone do?
Yeah, once you are in a contract with a third party to purchase your home, for instance, or some property, now you've got contractual issues with them. They're almost always time sensitive, and the IRS isn't real fast on any type of relief. So you're getting some serious pressure put on you by the transaction that needs to occur with the contract that you have with this third party. So you've got a couple of options there. You can make a request for a settlement there, although those take a while. You can, of course, pay it out of the proceeds. You could also ask them to subordinate that lien. You could ask the IRS to, in other words, take a second or third position as a lien holder, so that a bank, for instance, could come in and pay that off, so that that's wiped clear. So you can proceed on with that one. But boy, liens are tough. Once they attach, your options are very limited if you're running headlong into another financial transaction like a sale. So yes, as quick as you find out about a lien, the better off you are at trying to get that removed, so that you can go on with your financial life.
Okay, so let's say I received notice of a levy, I guess either from the bank, or I would receive it from, or you go to do a transaction, something doesn't happen, you call your bank and they say, oh, there's a levy.
Yes.
Okay, first thing I'm going to do is obviously call you.
Yeah, you need to.
And then what happens? What do we do there?
From there, same type of situation. Your employer, for instance, would need to receive a release, or their hands are tied as well. They've got to send those things along. We can get most levies released in 24 hours or so. Usually the big kicker, though, is that a lot of these folks, again, have unfiled returns, and you have to have your returns filed, or you've got to convince the IRS to put on the brakes with this levy while you get those returns on file. And that's why we file these things very quickly and accurately so that we can get on to these requests. But I would say you've got more options there than you do with a lien.
Now, if the IRS is coming in, let's say they're already garnishing wages, does that go hand in hand with the levy, or that would be two different? How is that different? What can someone do if they've already hit to the employer?
Yeah, garnishment and levy are virtually the same thing there. But yes, there are still some things that can be done.
Can they do that without giving prior notice, or would you know that's happening?
They must give prior notice in most circumstances. There is a very rare outlier here that when the government thinks that the money is for some reason going to be absconded with or in jeopardy of going away, they can do this without notice and then come back later. That's a very, very small subset here. In most circumstances, they must send notice. They'll send multiple notices in most cases, but there is one Moneyball notice that comes down the pipe, and that's the 1058 final notice of intent to levy, and it carries with it collection due process rights. In other words, a right to a hearing on that, and they have to send that one to you certified. However, if you haven't filed in some number of years and you've moved, for instance, the IRS only has to send it to your last known address, and so you may never see that final notice of intent to levy.
And they've fulfilled what they have to do.
They've fulfilled what they've had to do. You miss your opportunity to ask for a collection hearing in that circumstance, and more importantly, you miss your opportunity to stop collection until they have that hearing.
Let's move to audits.
Sure.
The word that no one wants to hear.
Right.
What can a taxpayer do, even if you are up to date, what can you continue to make sure you're doing to avoid audits?
Yeah, a lot of audits there's nothing that you can do about it. They're either random, or if you make, really, really strong money there, if you're in the $1 million plus category, your chances are going up exponentially that you're going to draw an audit. I think really the only thing that you can do to prevent one from coming down in the first place is to not be lax with your deductions, for instance, meals and entertainment. The IRS has a big pet project in the hobby loss category. In other words, you run a farm or an aviation company that really is just your hobby and the business never makes a profit. The IRS is never getting its tax money from this so-called business. Those types of things are red flags and have been for some time and will continue to be. The more conservative that you are in the process of taking your deductions and staying away from those types of more hazardous endeavors, the better chance you stand at not running into an audit.
Now, staying with that, let's say someone makes an honest mistake. Let's say someone's filing and they forget their real estate taxes. They don't, for whatever reason, put them in. They end up paying that year, and they go back and go, oh my God, I forgot. Is refiling or amending like that a red flag, even if it is a legitimate mistake like that, or do you stay away from refiling no matter what?
One time, I would say, if you do an amendment to correct a mistake, sure, I think that's fine. I don't think that that's going to draw a lot of red flags there, unless it's a massive. I think a lot of times when you go from owing something to getting a massive refund, that's certainly going to draw some red flags there. But fixing a mistake in and of itself does not draw anything like that.
So let's talk about client interaction. I'm sure you've seen it all over the years. Tell me about some of the most satisfying where someone came in and was really kind of like, I don't even know what to do here, how I move forward with my life, my relationship. It can affect a lot of things.
Absolutely.
Tell me about some of that.
Yeah. I'd say just about every case that we reach a conclusion on fits that bill pretty substantially, but there are some that stand out. There's a service-related disabled veteran that came to see us a couple of years ago, and the IRS was taking his disability benefits through a levy proceeding, which is a no-no with the IRS. It's one of the few things that they can't levy on, and it took several years to get through the system as far as convincing the IRS that they had made a mistake, including some appeals. And they did finally admit that there was a mistake made there and gave him the money, the benefits back. And so that was a very satisfying outcome for him, because he had waited so long to get these things back. Just helped a lady in another state back in the summer she was an insurance agent, and she had become disabled also, had taken a prescription drug that was basically shutting her body down. She was unable to essentially make any more of her commissions. They were going down quickly. The only thing that she had was about $8,000 worth of equity in her home, and we settled about an $80,000 tax debt for $8,000 there. Yeah. There was a gentleman who had some substituted returns. When the IRS, when you haven't filed for some period of time, the IRS will create returns for you, and in this case they had done so in an amount over $1 million, and we were able to get him an offer in compromise within about a year to settle that, more than $1 million worth of debt for about $6,000.
Wow.
Yeah.
Let's talk about offer and compromise.
Sure.
People know those two words, but I don't know if they...
Right.
When does it go to offer and compromise? Are there different kinds?
Yes.
What do you mainly try to set up? What's the most beneficial for me, the taxpayer? Tell me about offer and compromise.
You bet. Offer and compromise is the most powerful relief package that the IRS offers. There are different types of them. The most common one is where they're not going to be able to collect the amount that they're saying that you owe within the amount of time that they have to collect it. There are a couple other types. There's an effective tax administration one, which basically means it's not fair to come after this taxpayer for these things. That's usually for elderly folks where all they have is the equity in their home, for instance. Right. But that collectability offer and compromise is a really powerful one. In essence, what they are saying, what you are saying to the IRS is, even if you took all my equity in any assets that I have, as well as the disposable income that I have, in other words, all my income minus expenses that I have every month, food, clothing, shelter, health, welfare, transportation, staying alive, in other words, when you net that out and then extrapolate it over the course of time that the IRS has to collect it, they're not going to be able to get what they're saying that I owe, plus penalties and interest. And that's the recipe right there for the doubt as to collectability, offer and compromise. It is a powerful one. Our average accepted offer and compromise is about 12% of what the IRS is saying that the taxpayer owes. So it is a powerful one. They do like to say no a lot on these, which means you're going to have to go to appeals in many, many cases. And that's where I think a lot of people that do end up filing one of these for themselves end up, becoming completely overwhelmed at that point. Is because the IRS is going to say no on a big majority of these. Even if you've got a really good offer out there, you have to see it all the way through. And 9 times out of 10, your best bet is going with an attorney that deals with these matters every day. So
in closing, I know you do more than just practice.
Yes.
You wrote a book.
Right.
And we have it here over your right shoulder there, IRS Problems. Why'd you want to write this? I guess because a lot of what we talked about here today, but why'd you want to write it?
I wanted to provide taxpayers with a tactical, something that they could understand in a very short period of time. It's a short book, relatively speaking.
Mm-hmm.
It is written in layman's terms, no fancy stuff.
Yeah.
I organized it in such a manner that someone who is picking up our most common tax problem could pick this book up and finish it off in about 45 minutes or an hour,
Yeah.
and be at least armed with the terminology and things that they needed to make an informed decision on whether they want to handle this thing themselves or call a licensed professional to be able to handle it in real time. Because again, that deer in the headlights thing, when the IRS shows up at your doorstep, you're subject to just so much fear and not knowing what to do. And you know, if I've helped somebody who can go, hey, I need to go look at that survival guide real quick and figure out what my rights are in this particular situation, then I've helped some people.
If you had, I guess if you were making one, you know, I don't want to say please, the wrong word, but if you were talking to the audience on, you know, the mission statement kind of your firm, what would you say to someone out there watching this thinking, man, pick up that phone?
You bet. If you're at that point where you would like to look at what that getting your rights advocated are, we would highly encourage people to look at our firm, because we provide troubled taxpayers with a customized and actionable plan to file unfiled returns, negotiate with the IRS, and to stop immediate threats to their financial livelihood so they can get a good night's sleep again.
Well, it's been a fascinating conversation. If people want information, they can go to your website, which is at what, TravisWatkins.com?
TravisWatkins.com. We're also available at 800-721-7054.
Awesome. Travis, thank you for being here.
Thank you,
It's been
sir.
a pleasure having you on Spotlight Television.
Thank you, Damon.
Best of luck.
Thank you very much.
Thank you.